Hello, everybody, and welcome to episode 61 of The Real Estate Show. I'm Cherise Selley, and with me is Judy Steenland. We are part of Selley Group Real Estate right here in Colorado Springs. We are here to give you the relevant data right now that we're experiencing in this market and some national news too, to help you kind of walk through and make more sense of what's happening, at least to be aware, educated, and informed. And let's get through the hard stuff together, Judy. How does that sound?
Let's do it.
And the hard stuff meaning, yes, the market is turning, but it hasn't gone into darkness and complete despair because we are still above home prices that were at this time last year. We're still above home prices. So let me start with the September stats. We have those stats in for the month of September 2022. The average price of a home dropped 1.4% from the month prior. So it makes it at $523,117. And the median price of the home dropped 4.3% from last month, making it $460. But the median price of a home is still 20%, or I'm sorry, not 20%, $20,000 above last year. So the median price is still a gain of 4.5% since September of 2021.
And that's good news.
Yes.
I know a lot of sellers think that because we are not listing as high or getting as many offers that it's a down market. And it is moving downwards and shifting downwards some. But yeah, we're still in the positive green space.
It's definitely shifting, but at least people can understand in the context of we're not slipping back at this point by years and years.
Yeah.
We're slipping back to closer to where we were last year, but we're still above it.
Yeah.
And so it does require quick adjustments on pricing, quick strategies, staying ahead. Bill McAfee said this in our podcast, and it resonates in my heart so much right now, that sellers, you do not want to be chasing the market because you're going to be chasing this downward trend. You want to be ahead of that.
Yeah.
So in pricing, it seems like it seems like the antithesis of what sellers have been told to do this for years. Some agents have been not even around long enough to think this way, but the truth is, if you're ahead of the market, that means you're pricing, expecting that downward turn, and you hit the pricing before that next turn happens, so that you give the buyer pool the opportunity to be attracted to where the pricing is going, and not being at the back end of that, where ultimately a seller will make less money in the future.
Well, and those are hard conversations to have because I think every seller, obviously wants to make the most money in the shortest amount of time on the market. That's our goal always as agents, as sellers. And looking at those numbers where we would have priced 3 months ago, 5 months ago, are totally different than where we're pricing right now. Mm-hmm. And I've got a listing that I'm working on right now, and we're watching the numbers. Every Monday we're running numbers. We're keeping up with the numbers, and we are watching in that luxury price point more listings, less of multiple offers, less than 100% list to sell price ratios. So we're going back to some of the numbers that we saw years ago, not months ago.
Right. Well, that's good. And I think what I like about that strategy is that you're keeping your seller informed weekly.
Yeah.
Because that's how fast things are changing right now. There's a weekly change. And I would say this though, we do have more active listings, of course, than we've had in a long time, but we're kind of seeing a stabilization of that active listing inventory. It's not like we're just getting more and more actives each month. We're kind of stabilizing. Right now, we're at 2690 units, or at least for September. That's where the stats were. It is up 127% as far as active listings from September of last year. But remember, like in times where we're still considered in a lower inventory time.
Right.
And what would a high inventory be? I think that might be around at least 6,000 plus homes.
Yeah.
So we don't have that yet. Thank the Lord that we're still in a lower inventory time. But here's the good news about that. For buyers, you actually have a choice.
Right.
And we've said that before too.
Right. And you can have an inspection and you're not overbidding necessarily. I mean, you might even come in under list price and, you have those options now.
Absolutely.
There was a listing out in Monument that we were analyzing, and we looked at the list price versus where we thought, compared to when the home we were listing should have been, and we were like, wow, that's pretty low. And we kind of guessed, well, they listed low because they're going to strategize and get multiple offers. Well, it just closed, and it did go for 100%.
List to
sell, but they did not get the multiple offers. So that's something to be prepared for. Also, if you think you're listing low, maybe you're going to sell. It did sell in 3 days compared to now over 60 days, average days on market in that price point.
That's right.
But it did sell quickly, but they did not get multiple offers.
So, and the whole idea of listing low is not the idea of lowballing, but listing for what prices were 3 months ago is a completely inaccurate way to go about pricing.
Right. Well, and at the end of the day, this homeowner did make a very big profit over the last 5 years. So it's not what it was like we were talking about, but they did not take a loss on the house by any means.
And as you said, there weren't multiple offers.
Yeah.
So let's dive into that a little bit, because I think it was kind of sad when I read this update from a lender, but it hit the reality of what we're experiencing as agents, listing agents too, that we right now in the marketplace nationally, loan applications are at a 25-year low.
Mm-hmm. Wow.
So I think that sellers get realistic quickly.
Yeah.
Because it's not that there isn't a buyer pool. They are out there, I promise you.
Well, there were a ton of buyers that were sidelined because of the rising prices and the bidding and the inspection waivers. So yes, I agree 100%. They're out there.
They're out there, but you have to capture them not just with pricing, but these concessions are more important than ever, with interest rates being in the 7% range.
Yeah.
And they're not expected to go down right now.
Right.
So interestingly enough, interest rates are the highest that they've been in 20 years.
Right.
And because they are so high, I was reading in Realtor Magazine, there was a really good article about this with the economy, that the average median home price in the United States, the buyer needs to make $40,000 of more income to afford the same home that they could have bought last year.
Yeah.
$40,000 more. But the average raise is only $2,300. So there is this tension happening. So sellers, you're not undesirable in your home. It's that buyers are trying to figure out every creative way possible to get into a home. And there has to be there's this gap. We're in this in-between space. And I don't see it changing.
Well, and you add the election. We're in an election year, so you add that to it. So there are multiple factors that are affecting so many of the decisions that buyers are making right now.
That's right. So sellers to be the head of that and not the tail. You've got to adapt with a downward pricing strategy, not an upward one.
That's right.
You have to adapt to offering like maybe $10,000 plus of concessions, and do not expect multiple offers right now. It may happen. But, I have a story because, I listed a property that literally 6 months ago, the comps were in the sixes, the mid sixes for it. Mm-hmm. And I really thought, and we did get it under contract, but we had to have several price reductions. Mm-hmm. We hit that listing right at the time that prices started falling. Mm-hmm. And so we've had to adjust and we've had to adjust. And it's been painful. Like every adjustment, I know you feel it too.
It's painful for everyone.
We don't like it.
Yeah.
But we realize we have to do this for momentum to happen.
Yeah.
So we are actually under contract $75,000 now, lower than where we started.
Yeah.
And the comps are above that. So sellers, do not be do not be alarmed and think that you're getting bad counsel if you're selling under comp value, because again, those comps from 4 months ago, 6 months ago, they don't make sense in today's market. Interest rates were not at 7%. And so I can't tell you, with the offer, we had 2 offers. Both of them were not full price on the home. And we had already reduced so much. And one is a conglomerate company that made an offer, cash offer, to allow a family to live in there that could not afford it otherwise. And they'll be renting the home from this company until they can afford to buy it. So there is a human story to that.
Yeah.
The other offer was somebody who was a lender not from here. Very obscure letter, very hard to track and read and understand what that loan was about. So it's like, which do you choose? Do you choose this conglomerate, or do you choose this obscure loan? I always think that if you're a buyer's agent, you really have to, if you want the competitive advantage, don't be the obscure buyer's lender. Don't invite them in. Get to a lender that's local, that's trusted and proven in order to earn getting that offer pushed through.
That's right. And as listing agents, that's a huge part of our job, is vetting the offers and the lenders and all of the details that are in that offer. So it's not just one thing.
That's right.
And lenders play a huge, huge role in whether it's going to close, the deal's going to close or not.
Absolutely.
And right now, with loans being so difficult and interest rates just qualifying being harder, and just even on a side note, interest rates make a bigger difference than the price of the home. So the huge jump has made it much more difficult for buyers right now.
Because the price of the interest rate hike of 4% versus getting into this close to 7% or 7% loan makes over an $843 or so difference in their payment.
Yeah. And we've talked about it. I had a buyer qualify on a Sunday and not be able to qualify on the Monday to make the offer.
And so as the listing agent, what I'm really experiencing is a lot of fallout of contracts because of that. Even if the buyer gets qualified and the letter is current, the reality of what they're facing with other parts of the loan, or their just the payment and that settling in, sellers understand that we want to provide the most security we can for sellers to understand that they have a great buyer that's going to stick in. But I even had a cash buyer that defaulted. Literally, we were through all of our contract contingencies. Everything was done. We were ready to close. The day before closing, they had lost so much money in the stock market. They pulled their contract and defaulted, and it made my seller $7,000 of earnest money, but they didn't really care about the earnest money when there's over $500,000 that they did,
And probably plans on the other end of that where they needed to move, and it's just it's a domino effect.
And since then, the market has adjusted a few more times downward. So what they're ending up selling that home for, because of the time lost with this cash buyer, is far less than what they would have made, even 45 days ago. So it's those things. We do everything we can to prepare, but we can't control. And, I think the agents who are managing their buyers' fears are the ones that are going to really, when you're working with a buyer, helping to manage the fear, acknowledging the fear, talking about it. Don't wait until you make the offer to go through it. This is some deep, heavy counseling. And go through it with your buyer. Make sure they're really okay. Don't let them make offers without understanding the consequences.
Well, and not making offers at the top end of their price point that's going to stretch them so far that they get to closing and they panic.
Yes. 100%.
Because from a buyer's perspective, losing $7,000 is better than being 30 years in a mortgage that they can't afford.
Yeah, you're right about that.
Yeah.
So I think there's so much to learn on both sides of this. We're traversing in kind of new post-COVID market waters.
Yeah, and we're all learning.
Absolutely. But I'm so glad that in our group, we have so many years of experience to not have every answer, but I think the skill set right now is asking the right questions.
I 100% agree. Asking questions, but analyzing the data as it's coming out. So being real time on top of numbers.
That's right. Such a key. Well, Judy, thank you so much.
Yeah.
It is so fun to do this with you, and we are going to continue and deep dive into this discussion in our next episode.